guys, and welcome back to another Money Tip Monday. My name is Lizzie Hofer, and I'm a residential loan officer here in Phoenix, teaching practical money tips to help you make smart home purchases. Today on Money Tip, I want to talk all about appraisals and what the process looks like, what the appraisers are looking for, and what happens if, God forbid, your appraisal does not come in at value. Now, before I get into all of that awesome goodness, I am going to ask you to like, comment, and subscribe to this awesome channel because I know you don't want to miss a money tip in the future. So for starters, what the heck is an appraisal and why do you need one? So if you're getting a home loan, you need one because the bank requires it, first and foremost, to make sure that their investment in your investment is protected. They're making sure that you're not overpaying for the property, that it's zoned correctly, that there aren't any additions or conditions to the property that are going to make it unsafe for you or for future buyers. And they just want to make sure that the resellability of the property is there in case you default. Now, the bank requires an appraisal because, well, I hate to say it, if God forbid you leave your property, something happens and the bank takes ownership of it, they have to make sure that they can recoup as much of their investment as possible. And since they're the one shelling out the big bucks to make this happen, they're pretty much going to require an appraisal. Now, some really interesting things that have happened though in 2020 that actually work to your benefit is that the banking industry has gotten really precise when it comes to risk and when it comes to automated valuations. So as technology gets better, as there's more information available online, they've actually been able to, be able to do what's called a property inspection waiver based on algorithms and a whole system that they use to value risk and property value. So that's available in some cases, which means that you don't have to get a traditional appraisal report. I see those happen quite frequently when people's credit scores are on the higher end and when they're putting 20% down, but I have seen it on cash out refinances. I've seen it on as low as 10%. It really just depends on, what the algorithm says about the value of your property and your risk as a borrower. But property inspection waivers are something that I hadn't seen in years when it comes to lending, and it's something that's new as of 2020, really. So just keep in mind, if you are putting 20% down and you have higher than a 740 credit score, I would be asking your lender if this is something that comes up for you. I will say that not a lot of lenders pay attention to the findings, and some of them are just so used to just ordering appraisals, but it can save you $500 to $600. And since this is a practical money tip channel, we want to make sure that you're saving as much money as possible. Now, a couple other things that are new, and they're new because of COVID, are exterior appraisals only. Now, it's a weird time. People are uncomfortable with strangers visiting their houses. Appraisers don't want to go into houses where people might be infected. And so if there is any kind of potential risk there, or if an appraiser feels uncomfortable, Fannie Mae, Freddie Mac, FHA are allowing exterior only appraisals in those circumstances. And what they do in those circumstances is they just take pictures of the outside of the property. They're looking for any issues with it. They're looking for, any noticeable defects, right? And then they're just giving a value of opinion based on comps and pictures that were available online. So are those the best appraisal reports? In my opinion, as a professional, no. I think they can actually impact the value of your home, especially if you have lots of upgrades. But it is something that is new in this market. And if COVID is a concern of yours, it is also something to ask your loan officer about. I want to shift, right, from what is available in terms of appraisals. And I want to start talking about the current climate right now, because in Arizona, we are in what's called a seller's market, which means that honestly, there aren't as enough homes available for sale as there are the number of people that want to purchase them. And so because of supply and demand, a lot of people are bidding over what houses currently value. And an appraisal report will look back anywhere between 3 to 6 months on past sales in order to come up with a purchase value, but it isn't the same as what somebody is willing to pay for it. In a bidding war, what happens is that people outbid each other up until the highest bid wins. That's not 100% what that house might be valued at. And I will tell you that A great real estate agent will really talk you through that, and they might not talk you against overpaying for a property if that's really the home of your dreams, but you're going to be aware of whether or not something isn't going to appraise based upon your agent's experience level. I will also tell you that appraisal value is never done on square footage. This is a common misconception. So people think, well, this house sold for this number, and then they divide it by the square feet and then multiply that percentage to their square footage. It is not done like that. Appraisals are formulated based on an add subtract basis. So if 3-bedroom homes at 1,500 square feet are selling at X, right, and 1,800 square feet properties that are 4 bedrooms are selling at X, they're not going to compare the 1,800 with the 1,500 if there are several 1,500 square foot properties in the neighborhood that are selling. So they're looking for apple to apple comparisons when it comes to properties. So the most similar like properties within less of 1 mile radius is really what they're looking for. And so this is just commonly confused because people like to compare their houses to the nicest house on the block or the crappiest house on the block sold for a lot of money, and people don't really know like what all goes into it. So I will say you want to compare your model to other models that are very similar to your square footage, your upgrades. If you're landscaping, pools, whatever the features are of your property, that's what you're comparing your property to in order to estimate your own value. Because we're in a seller's market, and because that's the way that appraisals are done, and they don't look in the future and they don't care what the house down the street is under contract for, it is likely that you may come into an appraisal problem, especially if you're somebody that's offered way more than what the house was worth, and then we're asking for seller concessions back. And that's typically how people negotiate. They're willing to put all this money in their down payment and they want the seller to help pay for closing costs. It's a great negotiation tactic and it helps lots of buyers get into homes. But there is a possibility that in this market where the prices are already slightly inflated and you're asking for more concessions, that your home might not appraise. So what happens if your property doesn't appraise? And I will say in a seller's market, honestly, this is something that I do see quite frequently, and it's because people are outbidding each other and they're rolling in closing costs and different credits for different things. And when you're in a tight market where things are rapidly appreciating, but the historical information doesn't support it, this is when you find yourself in a position to not have an appraisal come in. And there's a ton of things that you can do, and it doesn't necessarily mean that your house isn't worth what you're buying it for. So one thing I do want to comment on, and this is probably going to get me roasted in the comment section, but an appraisal is an opinion of value, right? So this is somebody, a respected professional, right, that goes into a property, but they may have different opinions about what your upgrades are worth or what your pool is worth or what the scenery behind your house is worth or the noisy road down the street, right? So it's an adjustment, add and subtract based on their opinion. So I will say that in my professional opinion, I think those opinions can vary somewhere between 10 to 20%. Whenever there's a 10% variance or less, I don't necessarily worry about that when it comes to value. The other thing is that many appraisals come in exactly at the purchase price, and that's because appraisers just want to meet the purchase criteria from the bank. The bank just wants to know that what you're buying the property is what it's worth. So they're not really trying to go over and above, right, what that valuation is. Many of them just try to meet the purchase price to ensure the bank that that's what you're paying for it. I get this question a lot, like, oh, that's convenient. It came in right at purchase price. But in all honesty, they're just trying to meet the criteria of the bank. Okay. So I will say that it's anywhere between 5 to 20% variance between appraisers. You can have 2 different appraisers appraise the same property. It's rare that they come in at the same value. Having said that, what happens if your property doesn't appraise? Well, you have some options. The first one is an appraisal dispute. You can dispute the information based on challenging comparable sales that they've used, adjustments. Things I like to look for are how recent are the sales? Are there newer sales for the same model matches that can support our value? Were there adjustments given to newer upgrades, better conditions, repairs that were done, things that have zero value. And I know this sucks because they're worth so much money, but like new air conditioners, new roofs, new flooring, that's an expectation when you purchase a house, that it has a good roof and it has a working AC and it has flooring. So unfortunately, you are never going to get a dollar for dollar valuation on whatever investment you did, even if you just paid 10 grand for an AC. Now, does it matter in terms of value? I would say yes. Some appraisers say no, but it is something that you want to keep in mind, because I know that that's something that infuriates clients. Those are the things that you can challenge. Those are the things that you might not be able to challenge. One thing that I do see a lot of times when it comes to value issues is sometimes the assessor site that has the recorded square footage is wrong. Every appraiser goes and measures the property, and this is always where we find out if there's a square footage issue when it came to listing the property. Because like I said, you're comparing it to other model matches, and so the homes might be larger, the homes might be smaller, but the square footage, believe it or not, in terms of model matching, makes a lot of difference when it comes to the value of your home, right? So making sure that the square footage is correct is another reason that you would challenge that. Challenging an appraisal is difficult, right? Because it's somebody's opinion, and I don't know how you feel when people challenge your opinions, but some people are a lot more stubborn than others. Some people are a lot more flexible than others. So an appraisal rebuttal may or may not work in your favor. Now, there are some cases where there's just disastrous appraisals that are done. I will tell you that you can definitely throw an appraisal out if you find a lot of material deficiencies. So they, just didn't go out to the property, they didn't use enough comparables. And you can ask for a desk review of that. And if it gets a low score, you can ask your lender to get a second appraisal. So those are things that you just want to be aware of as a consumer, as a real estate agent, that you might not know of. If you are going to proceed with your contract, the appraisal hasn't come in value, what are your options if you're not going to dispute an appraisal or try to challenge to get a second one? Well, you can start looking at all of the costs, right? First thing I see that goes is typically seller contributions, right? So if they were crediting you any money to go to closing costs, you might want to start figuring out, can you bump your interest rate up to offset? Can you get a lender credit? Can your agents help? You have to be able to figure out where those funds are going to come from. You can get a gift from a family member. I'll link the gift information video under this in the show notes below, right? But there's a variety of things that you can do. You can also decide to pay above the appraised value. Now, you might go, why the heck would I do that? Well, I will tell you that this is an appreciating market, and sometimes you overpay for things, that you really want because of supply and demand. And even if the market doesn't appreciate exactly at what you buy it for right away, the affordability with today's interest rates makes so much sense right now. You can, in some cases, get a 30-year fix in the 2% or in the low 3s. And I will tell you that affordability is somewhere between $30,000 and $50,000 depending on your shopping price, right? So I will tell you that if you have flexibility in your budget and you can do this, it's not always a terrible idea. You do want to make sure that you're working with a great real estate agent that can show you what things are selling for in the property. And then you're going to want to do this over an extended period of time and see, okay, well, if I live here for 10 years, what does this look like for me then? Right? So this is long-term planning. So yes, so I don't always think that it's a terrible idea to overpay for a property. And no, that's not because I work in real estate. Just to tell you, my husband and I did this a couple years ago. We bought a house at the top of the market, literally overpaid for it because we wanted to be in the neighborhood. That property made us 6 figures 5 years later. So if you know the property and you know the market and you know the area and you're going to live in the house for long term, it might make sense. So this is just my long spiel about appraisals. I could literally go on, and I hope that it's very informational and not too mortgagey, because sometimes I speak mortgage and forget to talk in layman's terms. So if you have additional questions, go ahead, email me, message me, DM me. I'd be happy to get in touch with you guys. And I guess I'll see you next week on another Money Tip Monday.